Hi there and welcome. My tax accountant has put together this guide because, well, after 18 years in this business, I've seen it time and time again. Inheritance tax catching really good families completely off guard. Today, we're going to cut right through all the jargon and focus on one single crucial detail: how you own your home. Because that one simple choice could be setting your family up for a huge and honestly a totally avoidable tax bill. So let's get into it.
Let's start with a number: £200,000. This isn't just a random figure. It often hits families like a ton of bricks. According to HMRC's own data, this is the average inheritance tax bill for an estate here in the UK. I mean, that is a staggering amount of money that can force families to sell things they love, all because of a little lack of planning. So, what exactly is this inheritance tax, or IHT? Well, think of it like this. Everyone gets a tax-free allowance, which is currently £325,000. But anything in your estate valued above that threshold gets hit with a pretty hefty 40% tax. That 40% is the number we need to plan around. Now, you might be thinking your IHT bill is just a matter of adding up your assets. But the real trap, the one that catches so many people out, is often hiding in plain sight. It's right there in your property deeds. A simple, really common choice about how you own your home can have massive and very costly consequences down the line. And this is it. This is the default setting for most couples in the UK. It's called joint tenancy. It just means you both own 100% of the property together. So when one person passes away, the house automatically, seamlessly, transfers to the survivor. It doesn't even have to go through the whole legal probate process. Sounds convenient, right? And it is, but that very simplicity is hiding a major tax trap. And here is the problem in a nutshell. When that property just automatically shifts over to the surviving partner, that first person's $325,000 tax-free allowance, poof, it often gets completely wasted. It just isn't used. That leaves the entire value of the home sitting in the survivor's estate, which, you guessed it, creates a much, much bigger tax bill later on. But there is a powerful, really strategic alternative that puts you right back in the driver's seat. It's called tenants in common, and this one simple change to your property ownership can completely change your family's financial future. So as tenants in common, you each own a separate, distinct share. Think of it like a pie. You can split it 50-50, 60-40, whatever works for you. Now here's the crucial part. There is no automatic transfer when one person dies. Instead, your individual share goes into your estate and is passed on according to what you've written in your will. This means you can direct it to your children or maybe even into a protective trust. Okay, let's just put these two side by side because this really lays the difference bare. With joint tenancy, you see it's all automatic, but it wastes that first crucial tax allowance. But now look at tenants in common. You have your own distinct shares, your share follows your will, you use your tax allowance effectively, and you have total flexibility. This, right here, is the difference between just letting things happen and actively planning your estate.
So let's put a real number on that difference. Let's say we have a couple with a home worth about £800,000. By switching to tenants in common and using a trust to receive the first partner's share, they could save a potential £130,000 in tax. That is a life-changing amount of money to keep in your family's hands, not HMRC's. Okay, so the why is pretty clear, right? But what about the how? You're probably thinking this sounds complicated, maybe a bit of a headache, but the process of switching, it's called severance, is actually quite straightforward when you know the steps. It really just boils down to 4 key actions. First, you have to agree with your co-owner. Then, there's a little bit of simple legal paperwork, a notice of severance, and a form for the land registry. But honestly, that last step, that's the most critical one of all. And I cannot stress this enough, this final step is completely non-negotiable. Making the switch to tenants in common is pretty much pointless if you don't then update your will to say where your share of the property should go. If you skip this, the law decides for you, and that could undo all of your careful planning. You know, this strategy is a real game changer for so many different types of families. It's great for married couples trying to maximize their tax allowances, and it's essential for unmarried partners who don't get those same spousal exemptions. It's also vital for blended families who want to make sure their children's inheritance is protected. It can even help business owners make the most of valuable tax reliefs. All right, we've covered the problem and we've covered the solution. So now let's focus on what you can do with a clear, actionable plan.
So, here's your checklist. First thing, find out how you own your property right now. Then, try and calculate what your potential tax bill could be. Have a chat with your co-owner about making the switch, and crucially, update your will. And look, for any situation, but especially for larger estates or if you're thinking about a trust, you should always seek professional advice to get a plan that's tailored just for you.
So I'll leave you with this question to think about. After everything we've talked about today, is the way you own your home, the simple default option, silently setting up a massive unnecessary tax bill for the people you love? It's a question that is absolutely worth answering. Every family's situation is different, and getting the details right is absolutely critical. If you'd like some personalized advice to help you navigate your inheritance tax planning and secure your family's future, please do get in touch with us at My Tax Accountant. You can reach us on WhatsApp or give us a call on 07854 255 375, or you can send an email to info@mytaxaccountant.co.uk. Thanks for your time.